Good morning, gentlemen.
Tim, we got you live on the air. Tim Melvin here on the Tim Melvin Deep Value Letter. First question is, did you cash on the Preakness?
No, I missed the exacta by a length. I had the 8 horse. It looked like I was going to cash, and then it faded back on me.
Yeah, well, I had it and it didn't pay squat because California Chrome came in. Now, if you would have flipped it the other way around, I think that it would have paid pretty good. But you think Chrome can win the Triple Crown?
Uh, yeah, I think he is. And he's a good horse. He's not the greatest horse I've ever seen, but it's not a really super strong field of 3-year-olds. His only real challenge is going to come from some of the Derby horses that come back
Right,
on
with on the rest.
additional rest. But I think he's got a pretty good shot because he looked like he was pulling away at Pimlico, and that bodes well for running that mile and a half at the Belmont.
Okay, market back up here near all-time highs, and I know you got your scanner out there looking for value. Is there any value out there?
Not a ton. It's funny. I just wrote a piece about that yesterday. In 2009, when we were at the bottom, 129 stocks in the S&P traded below tangible book value. It was a
Wow.
bargain hunters. Just it was paradise, right? Today that number is 12.
12. Give us the
Yeah.
top two. Do you have two of them there that you've got on your list?
I don't have the list in front of me of those stocks. They're both insurance companies, though. I can tell you that.
Okay.
I did that for an article, and none of them were particularly extreme values. Okay, they're all trading at like 90, 95% of tangible book, but pretty easy to replicate with a screener. You can find those. Nothing there I'd be buying. Just to the general level of, there's not a lot of cheap stocks out there.
Are you buying anything today? Like, is there anything on your radar here right now that you're looking at jumping into?
Sure, absolutely. We're just starting on this one. That's Hercules Offshore, HERO. Uh,
HERO.
Good
yeah,
symbol.
yeah, I think so.
Hero
Yeah,
stock.
yeah. It's shallow water drilling, and they've got lift boats that run the supplies out to rigs all over the world. 38 rigs, 19 lift boats, 5 more lift boats on charter. It's at 85% of tangible book value. Business has been all over the place for the last 5 or 6 years for this company, and so is the stock. But I pay a lot of attention to 13F filings of some of the smarter money managers, and of course, those just came out in the first half of May. And there's an awful lot of smart money moving into this stock. You've got LSV Asset Management, Royce Capital, Aegis Value, and even Jim Simons at Renaissance bought quite a bit of the stock in the first quarter of the year. These are really smart guys that have a even better idea of what the assets are worth than you and I are going to be able to get out of the filings. They have pretty strong research departments. But this thing's at 85% of book value right now. Insiders are buying it. The smart money's buying it, so it's cheap. It's in the energy business, which is one of my favorite long-term businesses. Even though we're going to have to recalculate some stuff after Mr. Putin gets done rewriting the energy markets this morning. But yeah, it's just a nice, cheap little stock that I think there's some catalysts to unlock the value over the rest of the year. It's probably worth $10 a share.
Okay, so if there's not a lot to buy out there, is there anything that you bought a while ago and it's reaching its target price, and you perhaps are starting to lighten up the position or waiting it to move a little bit higher to lighten up? Got anything near? And I know you're a long-term guy, so you must pick a level ahead of time and try and stick to it, or you moving stops up, or what's it looking
Well,
like on the sell side?
we don't move the stops up. We do move the fundamental value up and down based on the quarterly results. If the value of the company changes, then we move it up a little bit. And no, some of our European banks are getting close, but they're not quite there yet. So basically, I'm spending a lot of time sitting on my hands, not doing anything because nothing's horrifically overvalued, but there's just not a lot cheap out here either.
Well, you can't
What
get
other?
yeah, can't get in
I was
trouble.
going to ask if there was any other stock. So you gave us Hero here. Is there anything else? Because the chat always loves these stock tips that you give.
Yeah, well, let's go right to everybody's favorite area of the world, small banking sector. I mean, this is a sector where we can sit here and own these stocks and really not be overly concerned about what the market's going to do. And my favorite type of stock is what's called a thrift conversion, and that's where a mutual savings institution converts to a stockholder-owned institution. Closest thing to free money in the history of the world. Um, Anyway, one down here in Florida, based out of Georgia, but they've got branches in the Florida Panhandle and Alabama, is Charter Financial, CHFN. I'm trying to give you guys some here that are big enough to actually consider, because a lot of mine are. I bought one the other day, was an $8 million market cap, so we can't really talk about those.
No, you can't.
No. Anyway, it's a $1 billion in assets bank trading at 85% of book value. They just finished their first stock buyback and immediately announced another 10% stock buyback for the rest of 2014. Perfect loan book, which is almost shocking given that they're in Georgia, Alabama, and Florida. But only 0.91% of total assets are non-performing assets. Most banks are around 2%. And then they just have a sick amount of capital. The capital ratio, the equity to assets is 19.4 compared to about an average of 10. So it's not levered at all compared to the rest of the banking industry. Just a safe, cheap little bank that's buying back stock. It's just going to sit here and trade around. Eventually, this thing, I think, gets taken over, and that would be probably close to twice the current share price right now. But you're really not going to care what the stock market does on a day-to-day basis when you're in this thing.
Right, because you're holding it so close to book value.
Yeah, you're close to book value, and it's not in the indexes. The high-frequency guys aren't going to be trading this thing all day. So, if somebody puts on a big index short, well, this one's not in there, so it's really not going to be impacted too terribly much by all that stuff. And I like that right now, because this is a confusing time to be in the large cap stocks. As I said, there's not a lot cheap. Nothing's horrifically overpriced at this point, at least in my portfolio, that I'd want to sell. And then, they've had all these investment conferences in May. Do you guys follow those at all?
Just through the Benzinga desk here, we do, yeah.
Sure. And to think about this from the poor individual investor at home that's just reading this stuff online. You got Seth Klarman and David Tepper going, whoa, this market's a very scary place. I mean, we need to be careful out here. And it changed the channel for a minute. And there's Bill Miller and Leon Kieperman going, this is great. This is fantastic. Stocks are going to the moon. So this guy's sitting at home going, who do I listen to? What do I do? I like stocks these days that are well removed from the major indexes.
So you're always looking at these little micro caps or small cap companies as opposed to some of the major S&P companies there.
Yeah, well, after 5 years of the market going up, you're kind of forced there by the valuation work.
Right.
I said we owned a lot of big cap stocks in 2009 and even 2010, but they all hit their value estimates sometime in 2012, 2013, and have long gone out of the portfolio. The smaller stocks are what's cheap right now.
Okay. Is there anything that you got into recently or a little while ago and not working out for you? Maybe you're thinking, maybe your valuation was wrong on it. You got anything that you're getting some pain in?
Well, I'm getting some pain in the miners. I mean, clearly that's, nobody loves that. And I've got the silver miners, and they've been going down. Stocks like Core Mining, Hecla Mining. But no, I don't think I have my valuation work wrong. And unlike most traders that, as it goes down, they're stopping out, and it goes up, they're taking profits. I'm usually doing exactly the opposite. Okay, as it's going down, I'm usually buying.
And just following on that, I mean, being in the miners, what are you looking at, as you're looking at valuation? Do you think we're going to have a move in gold and silver? I've been knocking my head up against this 1290 level in gold. It's just been holding. We've had a long consolidation period. Are you looking at, for a move in the metals?
Well, I guess you have to say yes, since I own mining stocks. I don't know when the metals markets are going to move. I have no clue. I've never made a dime trading metals. Probably only traded them 2 or 3 times in my life and lost every time I entered an order. But these stocks are at 50% of book value, okay? And their balance sheets are actually in pretty good shape. They have enough cash to survive until they can thrive again. When are metals going to rally? I don't know. But I do know that at some point over the next 5 years, it's a really good bet that there will be a rally in the metals markets, and these things will go a lot higher.
Which miners do you like the best here right now? Like, which ones are you looking at?
Core Mines, CDE, and Hecla Mining, HL. I really haven't done much with the gold miners as of yet. Gold's a much more emotional marketplace than silver, although they are tied together. So we could get another swoosh down here in gold that creates some value in the miners. I did notice in the 13Fs an awful lot of the really smart value money was starting to buy miners, including Michael Price, Seth Klarman, Donald Smith, and guys like that were starting to take pretty decent positions in the gold miners.
So you like to see that. You do your homework, and then you also like to see confirmation from other people on Wall Street or, on their 13F filings. You mentioned a few other names before, but I mean, the big name, I mean, Warren Buffett's usually in, a lot of the larger cap stocks. So, I know that's not your forte, but, who are some of the other people you like to follow on their 13F filings?
Well, we follow. Obviously, we pay attention to what Seth Klarman's doing. For the small banks, we follow PL Capital religiously. These guys are phenomenal stock pickers. Donald Smith and Company out of New York, really, really smart guy. Only buys stocks in the bottom decile as ranked by price to tangible book value. I still follow Irving Kahn. The guy's 108 years old, still goes to work picking stocks. He was Ben Graham's teaching assistant. That's how long he's been doing this. The guy still goes to work every day. So, um, one of the more interesting ones, Renaissance Capital, of course, is a huge quant firm run by James Simons. One of their most successful programs is based on price to tangible book value and market cap. They're in all the small cap value stocks that you can find out there. Most people don't know that one. They think of them as quant shop because that's basically what they are. Quantitatively, small cap value is one of the larger, better performing asset classes. So you kind of run across them quite a bit. I still like following Michael Price because he's a classic value guy, even though he's only running mostly his own money now.
What do you think on this overall market? We're right back up here. Like you say, there's not that much value out there. Do you think we're due for a correction then on the overall market? Because we've been basically on a 5-year bull run here. And it just shows every time we pull back even 1 or 2%, these buy the dippers come back and they just drive the market back higher again. Do you think like long term here, though, we need to have a good correction so that we start seeing this value again where players like you will come back into the big caps?
Yeah, I mean, I don't make market predictions and I don't know when something's going to happen, but clearly there's a massive disconnect between Main Street and Wall Street. It's got to correct one of two ways. Either this economy gets a lot better real fast, or stock prices have to come down.
And you're not. I mean, you keeping an eye on the Fed at all? I mean, they're pretty much, stated what they're doing with, with the pace of tapering. So you're not worried about an interest rate spike or the QE being pulled off the table.
No, they can't. I mean, the Fed can talk all they want. They don't dare take their foot off the gas at this point in time. An interest rate shock is going to come in the long end of the market. I don't know what would cause it. That would not be good for anybody. But the Fed can taper the bond purchases, but they can't raise rates. There's no room in the economy for that to happen. So I get a kick out of everybody sitting around dissecting every single sentence of the Fed minutes because every month they say the same thing. It's a little bit better than it was, but we're going to keep interest rates real low till it's even better than this. That's going to be the policy for a long time, guys.
Okay, we've had Tim Melvin of the Tim Melvin Deep Value Letter. You can find his product on MarketFi, marketfi.com. Tim, giving us your honest take on the market. It's appreciated as always. And maybe we'll get you on again for that Belmont. Maybe we could find, a New York horse that's well rested. Maybe they can run down Chrome and give us a nice perfecta.
That would be nice because, as you said, the bets haven't been paying off very well the last couple races.
Risk reward. You got to always pay attention to that. And that's certainly what Tim Melvin does with his Deep Value Letter. Thanks a lot, Tim.
All right, guys. Thanks. Have a great day.